futures markets are owned by the futures markets participants. And if we had this type of short squeeze, it wouldn't physically settle. They would halt transactions, they would arbitrarily establish a price, and they would cash settle. If you actually think that you're going to catch the owners of the exchange way short, I got a bridge to sell you. But a circumstance that caused that to be a threat, which is to say if there were cracks in the futures market, you could expect some really interesting fireworks in silver.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 11th through August 18th, 2025, while supplies last. First this week, 1 ounce assorted silver rounds are just $1.49 over spot per ounce. Next, 10-ounce silver pamp bars are just $2.99 over spot per ounce. 90% silver assorted US half dollars are just 99 cents over spot per ounce. MS64 gold US St. Gaudens $20 coins are just $180 over melt per coin. 1 ounce gold Rand refinery bars are only $65 over spot per ounce. And finally, 1 10th-ounce platinum UK Britannia are just $34 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're delighted to have this returning guest, Rick Rule, a legendary investor, the founder of the Rule Symposium on Natural Resource Investing. That's an annual event, and a widely followed advisor on all investments resource related. Joins us this Wednesday, August 13th, 2025. Rick, thanks for coming back on Liberty and Finance.
Pleasure to be back with you. Thank you for having me back.
I can't believe it's only been about a month since we were together in Boca, and what an experience that always is. It's remarkable to see that many high caliber exhibitors, speakers, and attendees all brought under one roof thanks to your tutelage and your due diligence that you do pulling everyone together. So thank you for that. And we've got a list of questions that have been submitted ahead of your arrival here by our viewers and subscribers. They never give us a shortage of things to talk about. One of the things that seems to be emerging as a theme in the questions that were submitted were about the relationship of silver to gold in the current bullion marketplace, but also just the whole financial balance of markets and demand, supply and demand, and physical availability around the world. So here's one question that's rather new about a discussion of gold's potential role in the monetary futures of citizens of our country. Bill M. from Florida says, Rick, most of us know the gold and silver story that we've discussed here, but what about gold or silver-backed stable coins and the tokenization of gold and silver being rolled out now? The reason Bill has asked questions in the past because he knows that you tend to be a critic of many actions on the part of government that are cloaked grabs at power or loss of privacy by individuals. But your thoughts on this emerging phenomenon?
We will definitely see stable coins or tokenized deposit receipts around gold and silver. I don't suspect that you will see a fully backed gold or silver token issued by a government simply because it limits their power. They would have to have the gold or silver to physically back the currency. And that isn't what they do. They assemble money to spend it. They have no interest in a stable currency because a stable currency reduces their ability to spend at will. What you will see, I think, is a crypto product, in fact, a coin, that is fully backed 100% as a deposit receipt. And I suspect that this coin will, in size, be redeemable. Let's say, as an example, that the coin represented a tenth of a gram. It is likely that one would need to assemble 50 grams or so in order for these fractionated interest, these coins, to be able to be redeemed for physical. But I suspect within 2 years, what you will see is a large deposit of gold that and or silver that is lodged at one or more reputable vaulting facilities. Then the deposit receipts representing real ownership in that metal will be issued to trade online, and that those coins, at least in quantity, will be able to be redeemed for physical metal. It remains to be seen how host governments will look at that particular fractionated currency. Remember the old law about good currency drives bad currency out of circulation. And I suspect that if you actually had a gold and silver backed quasi-currency, even a private currency, that was redeemable, that would create interesting times in terms of demand for government-issued securities. I've been asked, really for as long as you and I have been talking to each other, Duncan, probably longer than that, what the chance was of a gold or silver-backed currency. And I have to say that the chance of that is nil, simply because it limits the power of governments to spend. People get into government to accrete power, and the idea that they would adapt themselves to a currency which reduced their power seems very far-fetched to me. But you will see a private sector initiative. The technology exists today. I've invested in 3 different companies that are working on that technology. My hope is that, of course, one of the ones that I have invested in will end up being the paramount technology, but we'll see over time.
There was something you brushed over there about governments, those in the government seeking power and therefore loath to give it up. What about that? In the past, we've certainly seen individual examples around the world of heads of state of different countries who rose up and said, we're going to depart from dependence on the dollar. We're going to go off and do this thing that's based on gold. And they had unfortunate accidents typically within a few months. Do you believe that should this privately driven technology that we're describing of stable coins backed by physical and redeemable in metal would be somehow quashed by some maneuvering of governments? You said we'll wait to see what governments do about it. What are the kinds of things you anticipate are likely the government could attempt to do about it?
I suspect that they'll ignore it until it's too late to squash it. While I consider them to be odious, I don't consider them to be competent. And my belief is that with robust enough blockchain technology, these transactions are effectively anonymous. The problem with that theory is that the best storage facilities to effect this in are in more competent countries. Probably the best facility in the world to store this would be the Royal Canadian Mint. They have a lot of experience with us at Sprott, providing custody right now for $30 billion in redeemable precious metals. There's no facility in the world that has better ability to store, trace, and transfer, accept and transfer physical precious metals. There's no facility in the world that has the same ability to do that than the Royal Canadian Mint. If the government of Canada was particularly indisposed to this currency, that would be a problem. The current proponents of this problem, of this solution, include the London Bullion Market Association, and it might be as a consequence of the London gold establishment's attraction to this project that the Royal Mint, a vaulting facility in London, could be substituted for the Royal Canadian Mint. If a trusted domicile was found, one trusted domicile was found, I suspect that private action would ultimately defeat government sanction.
Still on the line of the gold and silver roles in our monetary lives, Richard Duarte, 4826, asks, we keep hearing about a potential gold revaluation. In simple terms, please explain how a revaluation would help alleviate the national debt burden and how this might benefit people who own gold and silver.
It wouldn't, and it wouldn't. If the U.S. government took the gold in Fort Knox, well, first of all, they'd have to do something they refuse to do, which is audit it and prove to us that A, it physically exists, and B, it hasn't been hypothecated. But let's say they revalued all that gold from $42 to $4,000 an ounce, just for fun, okay? How does that eliminate the national debt? I, as a creditor, buy a treasury bond. The government is either able to service that and pay me back, or they're not. Can you imagine Rick Rule rolling up to the White House with my bond, saying, listen, President Trump, there's something about this arrears. I'd like my gold. I need to remember that President Trump has a legal monopoly on violence, fraud, and force. The fact that they revalue collateral that a lender can't access is of very little interest to anybody. It becomes an accounting entry. The amount of gold that they have doesn't change. The creditor's access to the gold doesn't change. The only thing that changes is financial ledgerment. If I have a piece of collateral, Dunnigan, and you can't access it, effectively it isn't collateral. And that's the way it is with the government's gold. Remember, they have the guns.
In the past, you've reminded us to remind the government that there are more guns in circulation in the U.S. than in most countries, and therefore it might bolster people's private property rights. But there are two sides to that coin.
Of course, you have to look at the interests of the majority of the citizenry. 40% of the citizenry are net recipients of government largesse as opposed to payors. Some of the policies in our country that are so destructive of the country have to do with artificially low interest rates, and artificially low interest rates benefit spenders at the expense of savers. Spenders are more numerous than savers. I answered that question in the context of the government coming after people's IRAs. That's very different. If you go after somebody's IRA, which is to say, if you victimize all of Americans, you could expect a very hostile response. If you look at public opinion on X and you go after rich people, which is to say bondholders, that's not necessarily unpopular with a lot of people. To the extent that the government could make some bleedings about the fact that it's the billionaires that are the bondholders, I would suspect that the popular hue and cry would be stiff 'em.
That's, I guess that's partly assuming that the government is at the top of the food chain in decision-making rather than somewhere in middle management answering to our keepers, which has been postulated. Any thoughts from you on that? Do you believe that those in the visible chairs of power are actually free to act, or they're primarily doing the bidding of others, and they may not be able to pull a rug out from underneath high value bondholders, etc.?
I suspect that one of the reasons for Trump's unpopularity is that some of what he is doing today is very inconsistent with the wishes of the people who have traditionally been in power. I don't think he's any better than them or particularly worse. But it amuses me to see the reaction to his executive decrees, his executive orders, that didn't seem to be present when Mr. Biden or Mr. Obama were doing it. I think that Mr. Trump is probably a more rambunctious violator of the status quo. He's not doing it on my behalf, sadly, but I think he's proof of the fact that a strong-willed tyrant can, in some circumstances, disrupt the existing order. And as I say, I'm not saying he's any better or any worse. He is different. When people say that nobody can make a difference against a machine, strictly speaking, that's not true. If you can mobilize enough support, you can make a difference. I remember back earlier in my life to Ronald Reagan. He had an enormous mandate. In a wonderful book called The Triumph of Politics, David Stockman detailed how the state struck back. Democratic and Republican congressmen alike defanged the Reagan Revolution within 6 months. But what Reagan was able to do was establish an ethos in Washington that caused government from growing as quickly. And that ethos lasted through the first term of the Clinton administration. I'm not suggesting that he succeeded in reducing the size of government. I'm just suggesting to you that he succeeded in establishing an ethos that constrained the growth of the government for 12 years. And that shows that the deep state is less all-powerful than they would have you believe. Most of the time, they're 100% in control. But occasionally something happens which at the very least weakens their grip. What Mr. Trump is doing, as I say, don't get me wrong, I'm no apologist for Trump. I read his book, The Art of the Deal. I couldn't vote on him literally if my life depended on it. But what he is really attempting to do is seize the reins of the state from the incumbents. And I'm not saying he's going to succeed, but it's amusing to watch the effort.
It reminds me of two quotes. One was from the Bible, where Jesus battled with the devil for 40 days in the wilderness, and at the end, after resisting and resisting every temptation that was thrown at him, Christ did. The author says, "So the devil departed for a while." So you can get them to depart for a while and go and come back and gather their forces. The other quote is from constitutional attorney Edwin Vieira, Dr. Edwin Vieira, whom we interview periodically on our channel. And he, in the last election, he was saying electing Harris would be a catastrophe. Electing Trump would be a calamity, and that corresponds with the sort of the chaos factor that you were describing there. Back to the question of silver and gold, there's a lot of discussion around physical availability of silver. You and I have discussed that in the past when, during the silver squeeze, the Sprott physical silver trust had to do some rather extraordinary searching at greater and greater distances to be able to find enough physical silver to keep up with the demand for investable physical silver. There's a comment here from Han SP who says, according to the CPM group today, and I looked up this article and read it, there is no silver deficit, only marketing hype. Ray Dalio, however, claims the silver squeeze tightens. What is your opinion, sir?
They're both right. What Jeff Christian will suggest is that there is no deficit because there's inventory. And strictly speaking, that's true. There is a deficit if you look at the amount of silver that's consumed every year relative to the amount of silver that is produced from silver mines or is a byproduct of other metals or is recycled. And frequently the silver bulls suggest that this deficit is so overwhelming that the silver price has to move. What those bulls neglect to point out is there's several billion ounces of above-ground silver in inventory that doesn't have to be mined. Silver, unlike gold, is used. It's important to note that it's used in, for reflective capabilities, as an example, in solar industry. It's used in microelectronics, in regular electronics. It's also increasingly used as a germicide and in water treatment facilities. And a bunch of silver every year, goes out a tailpipe or goes up a smokestack or something like that. It goes to silver heaven.
Yeah, not to mention the silver that's in munitions and that gets vaporized when they get used, yeah.
Sure. More silver every year right now is getting used than is getting produced. But there are enormous stockpiles of above ground silver, and nobody really knows how much. I remember back to the 80s when Buffett suddenly announced that he owned 15% of the reported above-ground stocks of silver. The silver price promptly doubled. All the short squeeze guys, even in the 80s, came out from under their bridges or wherever they were. And all of a sudden, the silver price collapsed. And all the silver bulls were saying, well, this must be manipulation. This must be J.P. Morgan Chase trying to screw me. What it was was that there was a whole bunch of physical silver owned by the Indian peasantry. The silver price doubled in U.S. dollar terms, and the U.S. dollar doubled against the Indian rupiah. At the same time, I forget if there was a flood or a drought, one or the other, but there was a bad harvest in India, and the Indian peasantries had to make a choice between selling an asset class that was up by 400% or allowing their kids to starve. Pretty easy decision. So in the context of the question that you asked, both parts are right. There is a structural deficit in terms of new mine supply or newly created supply relative to industrial demand, but there are enormous above-ground inventories. The experience of Sprott, going back to 2014, 2015, the silver squeeze, is instructive. The narrative around silver was in full swing, and the easiest way for American investors to express their sentiment was the Sprott Physical Silver Trust. We as Sprott were able to use an at-the-market financing mechanism to convert this market activity into cash, which we used to buy silver. And for a while, we were raising $40 or $50 million a day. And our charter prohibited us from taking depository receipts. We had to take silver. So we couldn't hang around and try and buy that silver at the best price from the best taker. We cleaned out the silver that was available to us in Toronto. We cleaned out the silver that was available to us in Ottawa. We then cleaned out Chicago. We then cleaned out New York. Sidebar, gold is expensive and easy to transport. Silver is not expensive and it's tough to transport. And the people who owed us the silver, the J.P. Morgan Chases of the world, had to charter these very large airplanes to fly physical silver to us from Switzerland and London. Now, it wasn't that the silver was unavailable on a global basis. It's that the silver was unavailable where it was needed. And that goes to the futures markets. It's very common, Donegan, we've talked about this on your show before, because the futures markets are so liquid, because they trade such amazing volumes, it is not uncommon to see a single 24-hour period trade 200 times the physical silver that's available for good delivery. Now, invariably, these things cash settle. But if you thought about a very small amount of the futures transactions that was held for good delivery, that would absolutely overwhelm the futures market. Participants in the futures markets, or those who look at the futures markets to engineer a short squeeze, need to understand that the futures markets are owned by the futures markets participants. And if we had this type of short squeeze, it wouldn't physically settle. What would happen is that the exchanges would do what they did with tin. They would halt transactions, they would arbitrarily establish a price, and they would cash settle. That's what'll happen. If you actually think that you're going to catch the owners of the exchange way short, I got a bridge to sell you. But a circumstance that caused that to be a threat, which is to say, if there were cracks in the futures market, you could expect some really interesting fireworks in silver. I happen to believe you're going to see interesting fireworks in silver anyway. I don't think you need a really dramatic narrative to cause you as a speculator to buy silver. But I like to deal with that dramatic narrative because the facts suggest a different outcome.
We also saw that a few years ago in the nickel market, where the COMEX had to halt trading, cancel a bunch of trades, and dust off and start over. And it wasn't all those people who thought they made a truly impactful squeeze didn't necessarily reap the fruits from that they were hoping. Richard D59E says, how likely is the government to make it virtually impossible to sell gold or silver because of a windfall profit tax, in your opinion?
Highly unlikely. I remember that as pernicious as government is, they tend to do the easy things. If they lower the interest rate, which increases inflation, inflation is a tax. and it's popular. If they increase taxes on the rich, the people who aren't rich think this is a very good thing. The government doesn't need particularly to do politically unpopular things to steal from you. The government can do popular things to steal from you. The idea that the government is going to steal your IRA, as an example, I think is highly, highly, highly unlikely. The idea that in an economy that they describe as the best economy in humankind requires an interest rate decrease is a different way of stealing. Of course, their most effective way to steal, Dunnigan, is to index benefits to the CPI, which understates inflation, while allowing the continued deterioration of the U.S. dollar, while simultaneously not indexing income taxes and capital gains taxes to inflation. This taxation benefit relative to benefits that has to do with the discrepancy between the CP lie and the real rate of inflation is one of the most effective and pernicious forms of theft. Well, it's the most effective and pernicious form of theft, save an armed invasion of an adjoining country, that I've ever seen. And it's popular.
I remember you gave us the example of me printing Dunnigans in my basement, and I would be going to prison for that, but the government does it every day, and everybody celebrates that as a victory. In the market movements, it's hard to predict the future, says Yogi Berra, but Thomas O in 1720 asked, do you think gold could go through another 50% drop after this bull market run like it did in the early 1980s?
Yeah, absolutely. I remember well the bull market of the 1970s. Those were my formative years as an investor. In that decade, 1970 to 1980, the purchasing power of the U.S. dollar, according to the then Office of Management and Budget, declined by 75% in 10 years, and the gold price ran 30-fold. A truly memorable bull market. In the middle of that bull market, many people forget that in 1975, there was finally popular outcry against inflation. And Congress and the Fed decided that they were going to break the back of inflation and increase the interest rate. They did that, and the gold price fell from $200 an ounce to $100 an ounce. And the then Philadelphia Gold and Silver Stock Index fell by 65%. And it did it in 10 months. It was a precipitous decline. If you were a young man with a quarter of his net worth in gold and gold stocks, a guy named Rick Rule.
Just any particular guy, yeah.
It was a character-building experience, and Dunnigan, I was already a character, you know. It's important to know, though, at the end of that period in 1975, because it wasn't just the gold market that got impacted. The stock market sold off. The bond market got obliterated. Housing starts basically stopped. Consumer durables that are financeable, like automobiles, fell apart. So Congress lost their nerve in a hell of a hurry. And when they took the interest rate down at the end of 1975, savers and investors in the United States and around the world understood that U.S. society capitulated in terms of keeping the dollar strong. And people who got shaken out by that 50% decline in the gold price missed out on a move from $100 an ounce to $850 an ounce in 5.5 ensuing years. I'm interested in this question because I think the political pressure in the United States right now is around another concerted interest rate drop. And that interest rate drop, given the strength in our economy, particularly relative to other economies, will signal to investors and savers around the world that U.S. society and the U.S. government is uninterested in protecting the integrity of the U.S. dollar. And I think gold's response to a real interest rate decline or a couple of 25 basis point rate cuts could be dramatic, truly dramatic. Maybe not as dramatic as 1975 was, but truly dramatic.
We have a question here about individuals. You often start with the proper couching, saying it depends on your situation, your circumstances. We can't give individual advice here, so I'll get that out of the way before we even get in there. Bob Kent 2334 says, as a percentage of liquid assets, what percentage of physical gold would you recommend holding? And I would just broaden that to say, for different types of individuals, what are the considerations that you bring to bear in thinking about that question?
It does depend on your individual situation. If most of your portfolio is in long bonds and you're a pensioner, if you're going to get whacked by inflation, you probably need 30 or 35% of your net worth in inflation countermeasures, which is to say gold, silver, platinum, and palladium, that kind of thing. If you're a younger person and you're a skilled person where you have inputs and you can increase your wages at the same time as the dollar deteriorates, and you have time to come back from mistakes, you can own much less. This is what I will say, Dunnigan. This doesn't need any couching. The market share of precious metals and precious metals-related securities in the United States is 0.5%, which is to say 0.5% of total savings and investment assets in the United States are comprised of physical precious metals and securities surrogates. The 4-decade mean is 2%. And I would suspect in this market we're going to overshoot that mean substantially. I have a very difficult time for most people. Well, first of all, I have a difficult time for anybody that doesn't save 10% of their income pre-tax. There's a bunch of people that want to live rich, but they don't want to get rich. And there's a contradiction there. And you need to be a capitalist to get rich. You need to have some capital to be a capitalist. You need to save to get that capital. So the first thing is save 10% at least pre-tax. No ifs, ands, or buts. And save and invest the rest. And I believe that some portion of everybody's liquidity, but probably 20 to 25%, or depending on who you are, 50% of your liquidity should be in gold. If you save in US dollars now, which you must do, by the way, you must maintain liquidity. If you save in US dollars, you reduce your purchasing power by savings. You do it because the liquidity gives you the ability to survive and thrive in liquidity squeezes. But maintaining your purchasing power takes gold. If someone came to me and said that my portfolio is 20% liquid and half of that is in gold, which is to say 10% of their portfolio is in gold, I would say good work. Nice work. Remember that if you use gold like I do as insurance, a small premium, the premium being the cost of your gold holdings, yields real benefit if the circumstance that you're afraid of takes place. If gold does what I think it could do and triple or quadruple over 10 years, a 10% gold holding can shield you from a 50% decline in the value of your securities portfolio. As an example, if your securities portfolio was half of your total portfolio, a little bit goes a long way.
Before we leave the topic of gold and silver, because there are some other resource questions we want to get to briefly, we have just a couple ones that are very company specific. So if you want to give quick hits, would you recommend AG, PAAS, or MAG?
I don't think in terms of symbols, so I can't answer that.
Okay. AG being First Majestic.
Versus MAG?
Yes.
MAG's a higher quality company. On a fundamental basis, I would take MAG. The beauty of First Majestic is that Keith has spent probably $150 million developing 100,000 person constituency around that, and it may be more reactive to the silver price. Keith is a very good friend of mine. I'm a shareholder of First Majestic. MAG is a higher quality silver company.
We have another one. Rick's thoughts on current ranking on I-80 Gold.
I have I-80 Gold as a 6, which is not a high ranking. Despite that, I own it. Good range of assets, good people, totally pooched balance sheet. They need to fix the balance sheet. Prudent people, of whom I am not, would probably wait until the equity financing that fixes the balance sheet and then get involved in the company then.
And then this is a more general question, and it ties back to something we were talking about before as far as gold versus silver and as a percentage of your portfolio. Wode Shaman says, what is the better investment for someone wanting to both protect and grow their wealth? Mining stocks or physical precious metals, or perhaps a combination?
I would do a combination. I believe the gold price will go up, at least the nominal price of gold, but I own it to maintain the purchasing power. I own my gold because I lived through the decade of the 70s. I own my gold because I think the purchasing power of the U.S. dollar over the next 10 years will decline by 75%. And I believe that the gold price in nominal terms will increase to reflect the decline in the purchasing power of the U.S. dollar. I own the gold stocks because I think they relearned the lesson of financial prudence that they lost in the decade 2000 to 2010. I think they're becoming to be better run than industry gives them credit for being. And I own them because as the gold price increases, particularly if the economy stagnates, the gold price will increase faster than the cost to produce gold will, and their margins will fatten out. If I'm right, remembering the first part of the decade of the 70s, the gold stock indexes outperformed physical gold 3-1. I'm not suggesting it's going to do that again, but I am suggesting that even the best of the best gold companies, the so-called expensive ones, Franco, Wheaton, Agnico Eagle, the golden triumvirate that I call them, I would expect those three companies, as large and as liquid as they are, to outperform gold's performance by 2-1. So a saver, somebody who owns for protection buys the gold. An investor, even a prudent investor, buys the shares.
As long as we're speaking of shares and protection in the same sentence, I've got to ask this question. You've addressed this tangentially with us before. The book, The Great Taking, is out. And the question from Peachtree Road Bootcamp says, has Rick taken delivery, or you could just take this, does Rick suggest taking delivery of the stock certificates of his favorite long-term holds?
That depends again on the individual. If you lose a stock certificate, the penalty for failure is extraordinarily high. Remember that I own or ran a brokerage firm for 35 years. And there were a lot of, quote, prudent folks who took delivery, lost their certs. So if you were somebody like Rick Rule with a highly organized wife and a good information retrieval system and a superb executive assistant like Callie Farnham, and you have an adjacent safe deposit box in a bank, and you have a personal safe, and you keep track of all this stuff, and if you're an investor, not a trader, then take delivery. I often buy stocks with the view to holding them 10 or 15 years. If you take delivery and sell, and you can't make physical delivery of that share within 3 days, or if the share for one reason or another doesn't pass muster with the clearing firm, you're suddenly short. You can get bought in, lose money, and still have the damn cert. So I understand the risks inherent in the financial system. I understand, too, because I've been exposed to it, the frailty of individual investors' habits with regards to certificate storage and safekeeping. For most people, the correct line of defense would be to read the statement of financial condition of your brokerage firm and that brokerage firm's clearing firm and or the bank custodian, and do business with solvent institutions. Most people, as opposed to reading the financial condition of their fiduciaries, would prefer to read a book. So it's important to answer that question in the context of who the individual is.
Or they may also just be reading from the menu from the right to the left, saying what's the trading per trade fee that's being charged me, that sort of thing, or how much am I earning on my cash equivalent savings, whatever. We got burnt by that, certainly. This is a question now. Frontier Marvin71 asks, should investors be afraid of gold, silver, copper, etc., mining nationalization in the near future, such as in the U.S. and Canada, if we have an economic crash around the corner?
You should be concerned about it. It's a certainty. Not total nationalization, but what governments do is steal. That's what they're designed to do. They're designed to take from certain constituencies and give to other constituencies. I don't think in the United States and Canada you're going to see the outright nationalization of mines. What you're going to see is increasing taxation, a different royalty regime, a change in the depreciation schedule, a change in the requirement for community benefits around mining. That's very common. And you don't need to look into the future. You can look in the back of that. When the markets worked in the 1970s, our governments, by the way, a Republican government, established an excess profits tax on oil and gas. It's a taking. It's nationalization. They didn't take the whole well. They just took an additional 30% of the profits of the well. Fast forward about 20 years ago when the gas price increased, the conservative government in Alberta tripled the natural gas royalty. You don't need, in your fear of nationalization, to look to Bolivia. I lived in California. I remember the de facto nationalization of the Castle Mountain mine, which we discovered in 1981. It took us 13 years, and if my memory serves me well, $16 million in bribes, not official bribes or efficient bribes, but campaign contributions and deeds in lieu and stuff like that to put that thing in production. Effectively, that's nationalization. So the type of nationalization that the questioner fears is unlikely to occur. The creeping theft by pernicious governments is certain to occur.
That just squared. It sounds so realistic. That's what it rings true from that regard. As this is from Dr. Tech 2165. As the price of platinum was low, Rick said perhaps the Russians may be selling into the open market. Now the price spiked. Are the Russians buying platinum, or perhaps just stopped selling it into the open market?
I think the Russians probably ran out of platinum to sell. That happened in the period 90 to 91. When Russia went broke, the Russians sold everything they had on the shelf, which, not surprisingly, coincided with a low in nickel prices and platinum prices, which is what they had a lot of. When the Russians ran out of material to sell, the price rebounded. Sadly, Mr. Putin doesn't call and report to me. But the way the market is acting, without a real increase in auto sales to increase catalytic demand, will tell me that the Russian inventories are gone, that they have no more to sell.
Switching gears to energy, we have a question. Does Rick have any opinions on coal as an energy play? And does he have any opinions about Forge Resources Corp., which are going to mine coal in Colombia?
I don't have any knowledge of the latter issue or whatsoever, so I'll disclaim that. With regards to coal, this is highly unpopular, but coal mining generates a lot of free cash. It's a really, really, really good business. Then again, the big thinkers who I always quote, that noted energy physicist Greta Thunberg and, Biden and Trudeau and Merkel, probably Trump too. No, Trump is, I guess, pro-coal, but these guys will tell you that, coal's gone the way the dodo bird. It will surprise people to know the largest year on record for coal demand was 2024. And thus far in 2025, coal demand is up. It turns out that people in developed countries and people in green countries like Germany have this very uncomfortable predilection for the big thinkers. When they walk into a room and they hit the light switch, they want the lights to come on. And in most of the world, including in the United States, that requires coal. The most amusing example of this is Germany, of course, where the Germans first of all abandoned coal and then abandoned nuclear. And they decided that they were going to rely on solar, which is an interesting choice in the far north where the sun doesn't shine. A consequence of that is that you can turn a coal plant back on, but it's tough to turn a nuclear power plant back on. And so Germany's coal consumption, since they went green, is now up threefold. In answer to the question, I am still a coal investor. It's very difficult to find a high-quality standalone coal company. Most of the good coal assets are owned by integrated major multinational mining companies who pretend to be iron miners or copper miners or something else, but who derive a large amount of their free cash flow from coal. So my biggest coal holdings are in Glencore. Glencore isn't thought of as a coal mining company, except they are.
The second part of that question, which I didn't get to, was, but the company that you said you weren't familiar with is going to be mining coal in Colombia. Does Rick have any opinion on Colombia as a safe place to invest in or not?
Safe place. There's a lot of political risk in all countries, Colombia included. What I like about Colombia is the mineral inventory is so incredible, including with coal. I personally, and I don't know the company that the gentleman is referring to, but I know that Glencore has an absolutely superb coal mine in Colombia, in the lowest cost quartile worldwide and the highest return on capital employed worldwide. And if the deposit that he or she is talking about is anywhere near the quality of the Glencore property, you take the political risk that is Colombia so that you don't have to take the technical risk. I learned a long time ago that having an asset that's worth stealing in a country that might be predisposed to steal it is better than having an asset that isn't worth stealing.
Oh, I hope we're going to come up with a big dictionary of ruleism someday. Rules. Last one. And this is more of a thought experiment. Faisal Madur says, over the long term, if energy becomes more abundant and cheap, and they probably think of technological breakthroughs and various things, what does that do to metal prices? Would it be easier to get out of the ground, or would it put it more in demand?
I don't know. I can tell you that energy prices will become cheaper in the very long term. But in the short term, the terms that we invest under, let's say for the next 10 or 15 years, energy is going to be dearer. Zero doubt in my mind. Or at the very least, energy prices will be functionally unchanged while nominally higher. I think we will look back at today's oil prices, today's natural gas prices, today's coal prices and say, stuff is cheap. Really, really, really cheap. Now, looking at 50 or 60 years, that's a very different circumstance. I think in particular, the increase in demand for nuclear power will unleash technological advances of the type that we've never seen. The United States hasn't done much by way of new nuclear technology because we haven't built a new nuclear power plant of scale since 1982. When we start deploying these things, markets work. 10 years from now, 15 years from now, 20 years from now in particular, we're going to look back at the reactors that we're building now and say, absolutely stupid. We're using 1970s technology. And that's going to change. And it's going to change for the better. And the technologies that I make fun of, solar and wind, are going to get better and better and better. Solar works right now in places where the sun shines. I make fun of Germany using solar, but they have lousy weather and short days in the winter. In the Coachella Valley of California, as an example, if you put up a bunch of solar collectors on top of a Costco and you use it to run their air conditioning in the summer, it's extremely economic. And so the question is a really interesting one, because I do believe with technology, even despite increasing utilization, that over 50 years, 60 years, 100 years, energy is going to be substantially cheaper relative to other aspects of the economy than it is today.
I guess I fibbed. I told you that was the last question, but I can't let you go without asking you about Battle Bank. Jekyll May 7913 asks, will Battle Bank have a simple checking account and or precious metal storage? And if so, will it be available to Canadians? But we'll just start. Where are we at on Battle Bank? What can people look forward to?
Well, let's answer the question. Yes, yes, and yes.
All right.
We will have a high-yield money market account. No fees, I think above $10,000 in deposits, but importantly, we pay you interest on your checking. If you're interested in interest, think Battle Bank. Precious metal storage and insurance, absolutely. And unlike your existing bank, you will be able to establish a line of credit against your precious metals, which is to say you can access the capital that you have tied up in your precious metals without having to sell those precious metals. And yes, on opening, Battle Bank will be available to both Americans and Canadians. Our last bank, ultimately, we had the availability of banking services to citizens of 20-something countries. But that's a day at a time. We want to get licensed in the U.S. before we worry too much about other jurisdictions. In answer to the question, we have now bought a little bank, the First National Bank of Uppsala, Minnesota. And rather than having to get permission to open a brand new bank, we just have to get permission to add a bunch of capital to an existing bank and change their business plan. We have conditional approval from the tough regulator, the Office of the Comptroller of Currency. They're traditionally the toughest banking regulator. And we are awaiting conditional approval from the Fed, which we believe we could get as early as this week or next week. After that, we have to try all our banking systems out on existing victims, people like me, to make sure that I can deposit money and have it received, write a check and have it cashed, stuff like that, before we open the bank to the world. If you're interested in doing business with us, if you're interested in interest, if you're interested in buying, selling, storing, financing precious metals, first of all, you can do that through Miles Franklin. I'm delighted to say we have a selling group agreement with Miles Franklin. Or you can do the credit part directly with Battle Bank. In addition, if you want your IRA to be able to buy precious metals or buy a duplex, buy a Subway franchise, speculate in crypto, access private equity, you can do all that with Battle Bank. At Battle Bank, your IRA is truly that, is your IRA. It's not a receptacle for Wall Street's product. Almost 18,000 people have now registered at battlebank.com so that they can be among the first to open accounts with us and do all of the activities that we've talked about. We will allow people to access the services of the bank as we grow the bank. In other words, as we're capable of handling the business. Our last bank, EverBank, grew very, very quickly, and Battle Bank's going to grow more quickly. We're not going to allow it to grow faster than our systems grow. So if you are interested in any of those services, if you're interested in getting paid interest, as an example, go to battlebank.com and get on the waiting list.
And any upcoming boot camps we should make our viewers aware of. We just came, as I said, a month off of the Rule Symposium, or flagship event in Boca Raton, but a boot camp?
Part 3 in the gold boot camp. The first part of gold, you'll recall, was physical precious metals. The precious metals narrative and how to access physical precious metals, how to use precious metals derivatives like the ETFs and the trusts. The second discussed investing in the highest quality gold stocks, the Francos, the Euros, the Wheatons, companies like that. This next one is the rest of the gold equities trade. As the gold bull market advances and the money moves down the quality trail from the physical to the best of the best to the best of the rest. This is about the best of the rest. This is part 3 in the Gold Bootcamp series. I'm embarrassed to say I can't remember the exact date, although I was working this weekend preparing my talk. I don't know when I'm going to give it, but I'm ready to give it. It's going to be great. Like all our boot camps, it's very intensive, very detailed. You're going to have, if you choose to attend, a very hard 8 hours. You're going to have access to the recordings, which is great because you're going to need them. We're going to give you more material in 8 hours than you can absorb. And like every investment product, investor and education product I've ever sponsored, it comes with an absolute money-back guarantee. If you attend the boot camp or if you buy tapes of the earlier boot camps and you think for any reason whatsoever that I didn't deliver your money's worth, I'll give you your money back.
I'll put a link in the description of this video to how people can register for the Bootcamp Gold Investing Part 3. And folks, if you do use that link, you'll be helping Liberty and Finance as well.
I should also say, Dunnigan, while you're giving me leave for a commercial, we just did the best symposium that we've ever done. And we've done some really good symposiums going back a long time. There was 55 hours of programming in that symposium, and all of the attendees got access to the entire proceedings, the entire recordings of the entire proceedings. Since the symposium is over, we've sold over 100 copies of the symposium to people who were unable to attend. The symposium tapes are available too, and they come with the same solid gold money-back guarantee. If you think for any reason that the price you paid for the symposium, that you didn't get value, I'll give you your money back. Now, what I'd like you to do is listen to the tapes before you make that decision. I'm delighted to say we sold over 2,000 attendee packages, either live or live stream. And thus far, out of over 2,000 attendees, only 2 people think they didn't get their money's worth. We've only had to give 2 refunds. But that refund guarantee is your guarantee that if you buy the tapes or if you buy the boot camp, if you buy any investor education product from the Rule Classroom or Rule Investment Media, remember, it's 100% unequivocally guaranteed, unconditionally guaranteed money back.
That's we'll put all the links that you need to be able to take advantage of those offers for Rick's educational products in the description of this video as well, folks. And just Rick, on behalf of all of our viewers, as always, thanks for joining us here again on Liberty and Finance.
Thank you, and thank you for you and your family's ongoing support and attendance at the Natural Resources Investment Symposium. It was truly a pleasure and an honor to have you down there.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 11th through August 18th, 2025, while supplies last. First this week, 1 ounce assorted silver rounds are just $1.49 over spot per ounce. Next, 10-ounce silver pamp bars are just $2.99 over spot per ounce. 90% silver assorted US half dollars are just 99 cents over spot per ounce. MS64 gold US St. Gaudens $20 coins are just $180 over melt per coin. 1 ounce gold Rand refinery bars are only $65 over spot per ounce. And finally, 1 10th-ounce platinum UK Britannia are just $34 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.